And welcome back. Some huge changes are happening right now in our US housing market. So for example, the number of newly listed houses for sale just posted the biggest year-over-year increase since May of 2021. Also, the share of price reductions has been on the rise as well. And this has all caused a significant increase to housing inventory, which of course is giving more options for home buyers, which in turn is weakening home price growth. To say our housing market is unique is an understatement. So in today's video, I'm going to share the latest trends we're seeing right now in the US housing market regarding home prices, housing inventory, and much, much more. This is based on my own analysis of Realtor.com's latest data. So thank you so much for joining me in today's video. And by the way, a lot of research goes into making videos just like these. So if you guys get any value out of this video whatsoever, then please hit the like button. Also consider subscribing as well, because I post frequent housing market updates so you guys can make a more informed decision about whether to buy or sell a house right now. Thank you so much for doing that. Here is the actual article from Realtor.com, just posted last week on March 7th. Just like my previous videos, I did not even read their analysis. Instead, I want to provide my own analysis of their data. If you go to realtor.com/research/data, by the way, I provide links in the video description below for all the sources I go over in my videos. Anyways, if you go to this article or this website right here, click on weekly inventory and click on this link right here. It more or less takes you to this information right here. Let's first talk about asking prices. So asking prices on a national level. Again, this video is based on national trends, what we're seeing right now, which may be different than your neck of the woods. Real estate is local. So anyways, looking at the most recent stats we have, which is the week ended March 2nd, this is a very big change because this past week, the median asking price, this is the median list price for newly listed houses. The asking prices in which homeowners are asking for their houses was flat on a year-over-year basis. This is pretty wild because to start the year, we're up by 2.2%, but it has more or less been on this downward trajectory ever since then. On top of that, as a note right here, again, prices are flat more or less ever since the beginning this year. And also the year-over-year changes have been more or less on a downward trend. We will likely see asking prices down very, very soon because of this. And on top of that, due to the rise of price reductions as well. I have more news to share regarding that here in a little bit. This could all cause home sold prices to decrease very, very soon, but not crashing because we're not seeing inventory going straight up just yet. Now, speaking of housing inventory, active listings, which is the amount of houses for sale, increased by 19.9% last week. This is a very big change because to start the year, we were up by only 6.4% year over year. Additionally, based on my nerdy analysis here, this is also the biggest annual increase since May of 2023. There's been more houses for sale this year compared to last year for the past 17 consecutive weeks as well, which I mentioned is giving more home buyers more options to choose from. In my personal opinion, inventory has been increasing due to a decrease in home buying demand because rates are still around 7% right now, and home prices overall have increased compared to the start this year. But when we see this dynamic in which demand is decreasing, that can cause inventory to increase each and every year. Think of it this way. If we have an increase of new listings going to a bathtub, let's say new listings are water going to a bathtub. The bathtub is housing inventory. If the drain to that bathtub is kind of getting clogged up, it's not going down at a fast pace, that causes the water level in the bathtub to rise as the number of new listings increases every day, right? So if a home buying demand decreases enough, that will cause the water level to slowly increase. That's exactly what we're seeing right now. In fact, let me share data from Redfin. This is Redfin's data center regarding new listings. So new listings, according to them, have increased by 12.8% from 2023, We're still below 2021 and 2022, but the number of newly listed houses has been increasing and also increasing at a faster pace compared to last year. Speaking of new listings, this is a measure of the amount of people who are deciding to list their houses for sale, rose by 17.4% year over year, a sharp increase from the 4% we saw during the first week this year. So the number of new listings on top of that, that year-over-year increase up by 17.4%, the biggest increase since May of 2021. On top of that, it's been higher for the past 19 weeks in a row as well. Something that worth noting here is that even though new listings are rising, that is absolutely great news if you guys are looking to buy a house this year, or if you're actually actively looking to buy right now. You want to see more options because, of course, that limits price growth, and it also gives the opportunity to potentially get an offer accepted the first time and not 5 to 10 times like we saw in 2022 when we had a huge decrease of inventory levels. In any case, this is good news to see that the number of new listings is rising. But going back to Redfin's chart here, you can see here we have well below compared to 2021 and 2022. So even though we're up from last year, we're still down compared to the past couple of years. In addition to that, looking at Realtor.com's data for February, you can see here, right here, February, there was around 340,000 new listings nationwide this February. Look at 2017 and 2018 though, which is right about right there. During that time frame, there was around 450,000 new listings those Februaries. Now it's only at 340,000. This means we're missing approximately 110,000 new listings compared to pre-pandemic levels. I mean, could you imagine an environment in which new listings were at the same levels compared to 2017 and 18? Inventory levels would absolutely skyrocket. So even though we're still down compared to 17 and 18, inventory overall is still up from a year ago. Let's also talk about inventory levels, or the amount of houses for sale according to altosresearch.com, or my own analysis of their data though. So right now there's around 500,000 homes for sale. 1 year ago this time, around 413,000. So inventory levels on a national level have increased by about 21%. There's about the same number of houses though right now compared to the start this year. So overall, when looking at supply and the amount of houses for sale, we're relatively flat compared to the first week this year. In fact, it only has increased by 0.4% year to date so far. Compare this to the same time frames in 2023 though, inventory decreased by 59,000 from the start of last year. That was a 13% decrease. So to summarize here, inventory so far this year is relatively flat, a small gain of 0.4%, whereas during the same time frame last year, we were down by 13%. Also, as I mentioned below there, inventory is still down by about 39% compared to the same week of 2019. Let's have a look at their graph according to altosresearch.com. Not a paid promotion, but they have a really good website looking at national trends and also in many markets across the United States. So on a national level, we're at about 500,000 homes for sale. To start the year, we were at about 499,000, relatively flat, whereas last year inventory levels were going down from about 472,000 down to about 413,000 by the time we hit March 10th last year. Something worth noting as well is that we have around 500,000 houses for sale. Again, this is higher from last year, but also much higher from March of 2022, when we had about half as many houses for sale, but also higher than 2021, but lower than 2020, as well as 2019. Okay, let's get back to my nerdy Excel spreadsheet here, looking at days on the market. Days on the market is a time frame when you list your home for sale until you accept an offer from a home buyer. That's days in the market. So houses on average sold last week 2 days faster compared to 12 months ago. On top of that, houses are selling faster for the past 22 weeks in a row. Before that, it took longer to sell a house for 58 consecutive weeks. Again, a friendly reminder, this is based on closed home sales. Therefore, days in the market is a lagging indicator of our US housing market. Also, in regards to the number of price reductions, that actually increased by 31.9% last week. So the number of price reductions just increased by 32% from 12 months ago. This also marks the 6th consecutive week of year-over-year gains in the number of price reductions as well. In my personal opinion, as I note right there, the number of price drops has been rising due to two main factors. Number one, housing inventory has been increasing, which again is giving home buyers more options to choose from, and therefore home sellers are competing against each other, causing more price reductions. And on top of that, due to decreasing home buying demand from 7% mortgage rates. Let's also have a look at the share of price reductions according to altosresearch.com, because according to them, it's at 30.5%. 1 year ago this time, also around 30.5%, but at 30.5%, much higher from 2020, 21, and 2020. It's also higher compared to pre-pandemic levels as well, when back then the share was around 28%. All right, that was a lot to cover in today's video. So here's a summary for you guys. Number one, prices have been flat or up slightly year over year every week since last July. But the year-over-year changes have been more or less on a downward trend so far this year. Also, price drops have been growing as well, and therefore asking prices will likely be into negative territory very, very soon. Number two, housing inventory increased by 20% last week. That was the biggest year-over-year increase since May of 2023. This is likely due to weakening home buying demand and also due to the rise in the number of newly listed houses or new listings. However, even though the number of new listings posted the biggest increase since May of 2021, there's still around 39% fewer homes for sale right now compared to the same week of 2019. Number three, something I didn't talk about in today's video, but I should. The average 30-year fixed mortgage rate have decreased by about 1.1 percentage points ever since October last year. But because rates are more than twice as high as the 3% rates we saw in 2020 and 2021, there's been a limited number of houses being listed for sale. And thus, this is keeping housing inventory from not skyrocketing. And on top of that, keeping well below 2019's levels. That's housing inventory. We do not need inventory to rise to pre-COVID levels though, because think of it this way. In 2022, home prices decreased in the range of 10 to about 15%. Even though there wasn't a single week in 2022 that inventory levels got to pre-pandemic levels. So inventory levels were way below levels we saw in 2019. But on top of that, because inventory increased at a very sharp clip or a sharp rate in 2022, that was why home prices decrease. So again, we do not need to see inventory levels increase to pre-COVID levels in order to see home prices fall. Let's also discuss the share of price reductions, because that has been relatively flat from this time in 2023, but much higher than the previous 3 years in early March. Number five, houses are selling faster compared to the previous year for the past 22 weeks in a row. Again, this is a lagging indication though of our US housing market. So what are some potential huge changes ahead? And again, I am not a real estate market fortune teller. My crystal ball broke a long time ago. Number one, average 30-year fixed rates have decreased again by about 1.1 percentage points ever since October of 2023. That actually causes about an 11% increase in buyers' purchasing power because rates decrease by 1.1 percentage points. However, housing affordability is still very low, which of course is limiting home sales. Housing affordability, again, is a huge hurdle for home buyers right now, especially given the fact that it seems like virtually everything is more expensive right now than it was over the past several years. On top of that, rates have increased significantly and home prices are up by about 40% from 2019. Number three, early signs of home buying demand have been absolutely all over the place for the past year or so. The most recent stats we have regarding the amount of people submitting loan applications to buy houses fell by 8% from 1 year ago. That was for the week ended March 1st this year, according to the MBA. Also, according to the National Association of Realtors, they reported that pending home sales in January decreased by 9% from January 2023, and also decreasing more or less to the lowest readings on record. We're very, very close to that. So the amount of contracts being signed between buyers and sellers of existing houses still at very low levels. In stark contrast, though, sales of new home construction on a national level, and this is defined by a contract being signed between a builder and a home buyer on a national level, increased by 2% year over year this January. So existing houses, contracts being signed, fell by 9% this January, whereas contracts being signed for new home construction actually increased by 2%. It appears our housing market is highly rate dependent. So of course, the data coming in is ever changing. And again, real estate is local. Number four, the direction of our US housing market, in my personal opinion, will depend on unemployment, mortgage rates, inventory, and of course, the balance between supply and demand. Number five, the most important one, I appreciate you guys watching today's video. And of course, for supporting my YouTube channel, I appreciate you guys very, very much. If you guys got any value out of today's video, then like and subscribe. I hope you have an awesome day, and we'll see you on the next video.